Thank you, Steve. So Steve is saying I started trading in February and used several other trading services. Each boasted their 80 plus win rate. So win rate doesn't matter. I can boast 100% win rate, and still uh, members can lose money. So each boasted their 80 plus win rate. Okay, after a few months, I learned that it was untrue as my account suffered a 45% loss. Since I joined your group, I have not only regained my account balance, but I'm now almost 20% ahead, and it has only been two months. Thank you. So thank you, Steve, for giving me such a review. I think I should interview my members live, such as now, and ask them questions what they are doing in their trading. So what they are doing in their trading, how they are uh, executing their trades, managing their trades, what they do to profit. So Larry is also saying, I have John, another one. Fursan, yes, Fursan is saying, so I will send out email requesting whoever wants to interview. So I want to interview because not only you will learn, but I also want to learn. So I learn from the successful trader, what they are doing. They give me ideas. So whatever I am and who I am and what I'm doing these days or continuously for last 15 years, I grew up based on the ideas. So just the ideas from my members and from other traders. So something, someone mentioned something somewhere, and it's all up to you. Your eyes and ears and everything should be open and capture and then run with it and implement it. So I have a friend named John. He's my mentor. So he trades naked puts. So he does naked puts, and every week he tells me 25,000 this week, 35,000 this week. Uh, so I will interview John also. So anyway, so I plan to interview all of you. Uh, Basam, you can write your question here and I will answer if it's short. Otherwise, I will answer you via email. So let me share my screen. I hope it works. Sometime these things don't work. So let me know if you see my screen, please. Yes, please. I forgot to wear a tie. So, okay, thank you. Saying new hardware detected. Anyway, so today, okay, so initially before this session started, I showed you some reviews. I'll show you again. These are the real reviews from my members. They give me reviews every day. So I capture them and show you on the slide. And those winners I showed you, they are real. So the winners come um, as they come. I mean, they are winners. If I open my portfolio right now, I see winners after winners in my portfolio. So what I will do today, I will explain to you in a very short way of some trading strategies, what I do during the day, how I start trading, how I monitor the trade. So those things I cannot explain completely because it's a very big topic, but I'll give you some glimpse so you have some idea. And then I will explain to you those who are new members, those who are taking trial. I have a trial also, those who joined recently, those who are new, or those even they are with me for 10 years, they learn something. So I will explain to you how the target system works and what are those kind of targets and what I do. So how you can capitalize on those targets, because I'm always improving on my side. So behind the scene, there's a lot going on. Uh, behind the stage there's a lot going on. So you see the final movie in 2 hours and you say, oh, okay, great movie or bad movie, but behind that movie maybe there were 5, 6, 7 years of work. So there's a lot of going on every day. So early in my career when I was starting, I met few people who gave me the right direction. So one of the person was Chief, about 78, 80-year-old person. He lives in Santa Ana. So I asked one day, Chief, these guys, they are selling me software. At that time, I bought a software, which was a green line, red line software. So the green line, when the green line is above the red line, you go long. When the red line is above the green line, you go short. So they made it so easy, but it was not that easy. So then they came up with the option software, stock software, forex software, all kind of commodity software, future software. Buy this $25,000. We will give you training, autopilot and scanners and all that. Okay, 40,000. By the time you're done buying and everything and storing it and putting on shelf is $50,000, because then you have to learn all those software and fund all those accounts and run around. So all that. So I asked Chief. I said, Chief, should I be buying all this software because I only bought one? So what do you think? So he said, no, 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 only trade stock. If you cannot trade stock, so I was trading options. So he said, if you cannot trade stock, how can you trade forex and commodities and futures and oil and gold and pig and corn? Well, you cannot. So he gave me this advice of Bruce Lee. So Bruce Lee, when I grew up watching Bruce Lee. So this um, hit me. It says, I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. So he said to stick to stock trading because you can make money. Because stock trading, there are a lot of retail guys. All you have to do is better than some other retail guys, and you will make money. So there are a lot of professionals, of course, but then there are a lot of retail traders. So you have to be better than the other retail traders and just figure it out. Stock trading is easier. So I stick with this advice. You need to listen to the man who has some gray hair and some, lines on his face. So I listen to him. So, this I follow. And another thing, you need to learn as a trader. There are thousands of patterns there. All kinds of patterns, all kinds of option strategies, and all kinds of indicators and studies. They are like mumbo jumbo, so much. So what are we going to learn? We need to learn to master those techniques where the faster return, the compound effect, the turnover, not the strategy which will make me money 6 months later. If I hold it and then I buy some puts, or if it goes up, then I buy some calls, and then I create this spread, and then I manage this way, that way, and finally I have 8 legs open, and I have no idea which one is going which way. So I leave it to the masters who can manage those. I follow simple techniques. I monkey see, monkey do. So the stock which is moving up, I buy. So this is a simple advice. You buy the stock which is moving up, you sell the stock which is going down. If you follow this rule, you will never lose money. So I said, okay, Chief, I will follow this technique. And I remember one day he sent me an email saying, long 1,000 shares, Home Depot. So I looked at the chart and I said, well, I don't know what Chief is looking at. So 3 days later, he sent me an email, $3,000 profit, LOL. So I look at the chart and I said, oh man, wow, it really moved up. So he said, so he used to say, Tolia. So I said, okay, Chief, next time. So Chief sent me another email saying 1,000 shares here. I look at it and I said, okay, I don't know what Chief is saying because the green line is not top of the red line. And I don't know what software he's running, but not me. 2 days later, 2,000 here, LOL. So then I became leech. I attached myself to Chief and I started bombarding him all the questions I can. So he became my mentor. Uh, Unofficially. He was not charging me at all. He was just sending me the nuggets. So I learned a lot. So I started focusing on some of the strategies. So these are some of the things I do, and you may see it. If you're a member, you may see some of the things happening. So it's there. The stocks are making move right there in front of. It's just that we follow, we may have some indicators like, okay, this indicator, that indicator, this moving average, that moving average is not, the guru have told us that you need to follow this indicator. When this indicator lined up and when this line is below here and it's tilting, and this crossover you see here, and then this is the overbought, oversold level. And when the oversold level is here, the line is moving here, and there is a crossover here, and then there is a volume here, and all these, that's where you need to buy. So I don't do all that, although I follow some of the stuff, but I am a visual trader. So I'm a visual trader. I see it, and then I say, okay, this one looks like, they say this one looks interesting. So when I ask, okay, what do you mean by interesting? What is the definition of your interesting? And then they have no idea. It's just interesting. So a lot of things are interesting, but I don't go by. So some of the strategies are here. So one of the strategies is a breakout strategy where the stock is breaking out. So sometimes people say, when you say breakout, for me, breakout is not like, okay, it's a 52-day breakout or it's a new high, making a new high and it's breaking out. I don't chase those stocks which are making hardly. You may see sometime where the stock is making a new high and I say, okay, I'm going to buy. And the reason is that they are creating a new leg. So sometimes the market, the stocks, they create a new leg, a new journey, because they conquered a certain resistance level at the top. So that was the resistance, and they just conquered it, and now they created a new leg. And then you measure the move. You say, okay, what was the previous move, and then what would be the new move from the breakout level. So I measure that move, and I say, okay, I have the potential. So that is the breakout, one breakout. The other breakouts are from the resistance level. So the stock was consolidating and congestion zones and everything, and long congestion, 3 months or 2 months or 3 months, and solid resistance. And now they are breaking that resistance. So the beaten down stocks like Snap and all, you can find those stocks where they were beaten down like Lyft. So they are breaking out, breaking the resistance to break out. Breakout reversal strategy is one of the strategy, like when the stocks fall to some support. So now when the stock falls to support, then I go and measure the support level. So the strength of the support. So I need to measure it and figure it out. What is the strength? If the strength of the support is not strong, then that is not a support. So there was a one. So I read this story. There was one seasoned 80-year-old person, a stockbroker in the old days. He was in the stock exchange, and he used to sit in his office. And then there was his assistant, a young guy. He goes and buy his orders, fills orders. So he came down, and he said with his young assistant, and so asked his assistant, okay, assistant, what are you doing? And he said, well, I'm buying shares here because I see every time I'm trading for you. So every time stock comes to this level, I buy, and then when it goes here, I sell. So I've been doing it and making money. So he said, really? So is that your strategy? He said, yes. So he said, bullshit. Okay, so let me watch. So as soon as the stock came to support, he said, Sir, I'm going to buy here and I'm going to make money there. He said, no, here you sell 10,000 shares. So he sold 10,000 shares right at the support where he was about to buy. And then the price is tanked. So then the old man, he looked at it and said, okay, so what now? So it means that the support are just support till it's not broken. So, but if you evaluate the support level, its strength and the recency, and how long the support was held, like how many times, then you have a pretty good idea that this support will be strong. So I go, and when the stock pulls back, then I go. That's my job. It's like my job. I gotta handle this really. So I go and look for the support, and I watch it, stalk it. Like recently, I was watching Shop. So if you look at the Shop chart, I think I bought it at 30, 31. So, and then suddenly we made 75% gain. So Shop was tanking, like it was doing all this, downtrend. If you look at the Shop daily chart, you will see nothing there. I bet if you can show me, send me an email, tell me that this indicator was telling you that the shop will go up. Just send me your reason and say that, okay, unless you are my student, so or you're trading with me, so give me some logic that and give me some your or any trade, just send me something that this is what I was looking on the day chart and there's no indicator. If you find, let me know. And I traded this and I made 75% gain in 2-3 days. So shop was one of those. So I look at the shop. So my algorithm, so spend money on doing all that. So immediately I got the alert that the shop is in the trading support zone. I need to look at it. So I look at it, I evaluate it, and then I immediately no thinking, no analysis paralysis. That okay, let me see if indicator is there or not. Let me see if I go and read some seeking alpha news on shop, see what they are saying. Oh my God, they are saying all of them are saying bearish, the shop will go here, there, tank, and the bear market. So now she is bear market. How come you are trading the call? Don't you know this is a bear market and we should be trading puts? So no analysis paralysis. I ask, I shoot first, ask question later, because you see on the chart. So send the alert, shop long, buy these calls, and hang on to it. The support is at 30. So 1 or 2 days it didn't do nothing, and then it jumped up 75% gain. So why did it do that? Well, I went ahead and did my work, spent my time of 12, 15 years of experience, and apply the knowledge and position yourself and my members into short calls, not puts. So that's one of the strategies. Then another one is the gap. So the stock, if there are 8,000 stocks, so if you say gap means the stock which gaps up tomorrow. If it closed today at 80, tomorrow it opens at 80, 80.01, it's gapping up. So that's not the gap for me. So you have to have some meaningful gap. So some definition of gap. That what is gap? Is it above the yesterday's high, or is it above the yesterday's close? What is the percentage of the gap? Are you looking at the dollar point of view? Are you looking at the percentage? Are you evaluating from ATR point of view, 14-day ATR, 10-day ATR? So there's a lot of definition of gap. So when the gap occurs, you don't see the screen. I'm moving the screen also, Tony. I'm I am on slide number, what slide? I am on the slide called money making strategy. So I'm still explaining money making strategy. I'm not showing anything. I'm just talking one each. There are like how many strategies? 3, 3, 6, 7. So please don't rush. There are 7 strategy. I'm talking about the strategy number 3. So I'm not moving any slide. So I'm talking about gap up strategy right now. So I thought I'm frozen. I'm not frozen. So gap up strategy. So gap trading is my favorite because every day the stock gaps up. So recognizing from where the gap is happening. So location, they say location. So location of the gap, location of the things happening during the day also matters. So where the gap occurs. Is it the gap occurring from the bottom, like the stock was tanking and suddenly there is a gap? So that is a good one, because if the gap occurs after the market was in a declining mode and suddenly there is a gap and there is a volume and early morning, and then you can see the momentum, maybe it's moving beyond the normal range, maybe it's moving beyond the normal volume. So do you have a way of calculating the relative volume? So I have. So calculate the relative volume. Do you have a way of finding out if it's moving beyond its normal range? So figure it out. Is it where is the location? Location is good. Yes. Do you have a way of finding out the news? Maybe you can go and find the news fast and see what is happening. Then you go and find the option activity. Okay, the option activity is good. The volume is good. The location of the candle is good. The gap is not that big gap, so you don't want to go into a big gap. Just a so you can put some range, the top range and the minimum range. So if the stock gaps up 5 points and it trades $3 a day, that's the big gap. So you don't want to trade that. But if stock gaps up, if the stock trades like $10 a day and it gaps up 3 points, so that is a good gap. So you would go for that. So all that comes into play. And also think about this. If gap is occurring above the resistance level, or below the resistance level. So so it's like you are in the battlefield. Suddenly they just they throw you from 10,000 feet from the plane, and then say, okay, fighter, go and fight, and come, and we will pick you up 10 miles from here, like tomorrow. So go and fight. So it's like that. So when the gap occurs, then I go fight. I say, okay, where's the gap location? Is the resistance being conquered? No, okay, where's the volume? What is the option? What is the options telling me? Do I have time? What is the spread? What is the relative volume? How much it gap? Where is the resistance level? If I fail, where would I fail? Like if I if they start firing bullet at me, then where I'm gonna hide? So is there a basement below the basement, support below the support? Okay, here's the support. Okay, here's the support, but where is the other support? Because I don't believe in one support. I believe in multiple support because that gives me some cushion. So based on the support below the support, then I'm going to buy that strike, because if it's trading at 20, suppose 28, and I see 25, and there is another support at 23. So I say, okay, so 25 is the support. I can buy the strike 25. So I'll be fine if the option pull back to 25. I will not lose that much money from the time decay. But if it goes to 23, I better be still. If it goes to 25, I still be in the money, and I don't mind making less money, but I mind losing money. So I go buy the strike 23, 22, and it's kind of expensive, more money. And my members will say, why you're buying 22 strike or 24 strike when the stock is trading at 28? Why don't we buy strike 30 out of the money and make some money? So I tell them, okay, it's up to you. You can do that, but I am buying 24 strikes, and you can do whatever you want to do. So up to you. So now if the stock pulls back 24, I'm still not losing money. And then when it goes back up, I make some money. So I did not make 50%, maybe I made 25%. So recent example is the Snap. So I bought deep in the money. I think it was 11. It was trading between 11, 11.50, and I bought the strike 9. And then it dwindled. It just it goes down, and then it comes back up, goes down and comes back up. So it didn't want to break $11. So I was buying shares also. Besides option, I was buying shares. So 11.11, and then suddenly it moved up to 12.75 or something. So did not make one third sold, did not make much, 25%. So it's because had a lot of time. I mean, the strike. So that is a gap strategy in a summary. Now, so sometimes the gap strategy, gap up is the gap up. The gap up can occur, and then the stock doesn't do anything. So it creates a candle called twinkle twinkle little star. So that kind of candle it creates, and then it just gets stuck there. So when that happens, then I go and say, okay, this twinkle twinkle little star candle. So what's up with this one? So, oh, this one is at resistance level. So I am better off buying some puts, and I'll take my chances. And why? Because this twinkle twinkle little star candle is created at the resistance zone, and there is a resistance above. So just like basement below the basement, there is a ceiling above the ceiling. So how I would know if it conquers the ceiling, but there is a pretty good chance that it will bump its head and it will come down. So then I buy in the money puts and I wait patiently, because it goes bump its head, and then finally on a red day, oh my God, the Dow Jones is down 800 points. Let's see, and then that stock is just doesn't have any legs, and it just falls apart. So that twinkle twinkle little star by a gap up at the right location tells me that I need to buy puts. Now, sometimes these little candles, if you ignore them, so let's say for 30 minutes in the morning, and it forms, and then you ignore, and then you go and walk your dog, and make coffee for your wife, and by the time you come back, and then you see it, that little candle become like a huge white candle, and then you say, wow, what happened here? I missed it all. So what happened during the early morning? It was just not doing anything. It maybe somebody buying it, somebody selling it, buying it, selling it. Suddenly it decided. So it decided to move. So if you were watching it at the intraday chart, you may have noticed it that, oh, suddenly it started to move. I better get in because now I have a, a floor. I know that during the day it did this. Here is the floor, and here's another floor. So maybe that's your strategy. You can do that. So gap up. Another gap up could be that it gapped up above some meaningful moving average. So maybe it just gapped above the 50-day moving average. So it was trading below between, let's say, 200-day moving average and a 50-day moving average. So it was in between, and so it was in a la land. And suddenly, so the stock which is in between 50-day and 200-day is trading in la land, and then you say, okay, it's la land. I don't know what it will do. It's just not telling me anything. And suddenly, it gaps up, and it gaps up above 50-day moving average, and then it starts to move. So maybe that is your strategy. Maybe you can go long because now you have some signal that the stock did that. Now the gap down strategy. So the gap down strategy, the stock gaps down. So there are a lot of stock which gaps down. Most of the stock which are gapping down, they, I mean, it depends where it gaps down. So I like gapping down, going short on those stocks which gap down from penthouse. So I call it like, the penthouse is 100 floors. So it's a tall building, 100 story, and then there is a penthouse. So some stocks, they just go and sit in the penthouse and they rest there, like they are partying over there, like crude stocks. So the crude stocks are just all of them are partying at the penthouse, and suddenly they have no way out, and they take the parachute and they jump. So just think like that. They jump on the parachute, and the parachute is weak, and there is no floor. So the crude stocks are doing like that. They're just jumping from the parachute, from the penthouse. So when those kind of stocks, I like to buy puts because now I know that that penthouse is the resistance level. I mean, how it will be very hard for the stock to go back because the wind is blowing. If they jump to the 100th floor, they might as well come down to 90 floor, and then they will say, okay, I'm hurt. Let's wait at 90 floor and then go back up to 100, and then from 100 to 105, and then they will fly. So all that it will take time. By the time they they settle down, they probably settle down at 90. So whenever I spot a stock which is jumping from the penthouse, there you go. You buy puts because it's very hard for the stock to go back to the penthouse. They may try, they will fool you. So they will run up, and it's like become like a Spider-Man, and they will go up and climb, 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 and then they will just fool you. And you need to say, hold it, hold it, hold it, because they are not yet in the penthouse, and I'm fine. And then so at that time, when they are coming back to the penthouse, which is the resistance level, at that time you need to really know if this resistance is being broken with some volume, some like a cannonball. So is the cannonball being fired and the resistance will be broken, or just like a tennis ball, there is, they climb, but there's no volume, there's no power, there's no effort. So there's no effort, they will eventually come down. So they just climb and they may fill the gap, and then they crumble, and then they fall to the basement. Sometimes it happens. So though so I like those stocks which are gapping down from the penthouse, not they are already in the basement and then it gaps down. So uh, the value buyers, they come in. I mean, do you wonder that I bought this stock? It happens to me. It's not like it doesn't happen to me. That, oh my God, everything was just red, sky was falling, and I bought the puts. And the moment I bought the puts, this stock moving up because it already went down so much that it was time for it to go up. So that's the gap down strategy. Another one, the stocks which gap down to 200-day moving average. So 200-day moving, it's like 200-day moving average is like a giant hand. Like, they have that giant hand somewhere in China, the giant hand they created. So it's like a giant invisible hand, and then the stock falls to the 200-day moving average, and it just sits. Sometime intraday it will break the 200-day moving average, and then it comes back up. So that is a gap down reversal strategy. At that time, you need to be very careful. Just a second. Can you hear me now? Yeah, okay. So I'm explaining this topic. This require a lot of, and I mean, these are full day uh, um, explanation. I'm just showing you. I'm just explaining you. If you know a little bit of trading, you should know what I'm talking about. If not, then I'm sorry. I don't have charts right now to show you all these. So this is a 1 year coaching program. I'm giving you some glimpse. So gap down reversal strategy is a reversal strategy where the stock gaps down at some important moving averages. So some important moving averages and the stock reverses. So 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 when the stock gaps down, we pay attention. Pay attention to the support. Pay attention to the 200-day moving average. Pay attention to the 50-day moving average, because um, what we think is bad is not bad for someone else. So pay attention to why the stock has gapped down, and they may come back and buy. So your immediate buying the puts can turn into a loser trade. So if it's happening to you, you're ignoring all this support evaluation of the support. Now, another one strategy is opening range breakout. So opening range breakout is the strategy which I use where the stocks are moving in, like I have 500 stocks in one of the basket. So how do I watch the 500 stocks on any given day in the morning? So how do I watch it? So the way you can watch is you can set some criteria of the new high. Let's say you're looking for the long position. So if you're looking for the long position, then the stock must be moving after 15 minutes or after 30 minutes. So maybe you set the criteria that if the stock makes a new high after 15 minutes, I'm going to move this stock into another basket. So if you filter those 500 stocks based on some criteria, maybe some volume criteria or some dollar percentage, some dollar amount or some percentage. So you have sets of 15 to 20 stocks. Now if you have 15 to 20 stocks, so not all of them will continue to move up. So filter those which move beyond 15 minutes. So set a new high after 15 minutes. If it makes a new high, I will put the symbol into another basket. After 30 minutes, if it makes a new high during the day, then I will watch those. So after 30 minutes, you have only meaningful stocks in your hand based on the volume. So you set the volume criteria, some percentage of the daily volume, and the new 30-day high, not 30-minute high. So new 30-minute high and a new volume high. You focus on those stocks because those are the ones which are moving. Because if the stock gaps up, they continue to move higher after 30 minutes or after 15 minutes. So set some criteria based on the volume and based on the price, and focus on those stocks which are still moving. So those are the stock which will move after 1 day, 2 day, maybe rest, but they will continue to move. So this is another strategy I use for opening range breakout. So I use all these. There are many others. Some of these breakout strategy: breakout reversal, gap up, gap down, gap up reversal, gap down reversal, and opening range breakout. Now, there are many kinds of trading. So scalp trading, long-term trading, day trading, swing trading, position trading. Most of the money, I'm not a scalper. I'm not a scalper. I'm not a long-term trader. So I'm not a long-term trader. I'm not a scalper. And I'm not a day trader. So I am a swing trader or position trader. So this swing trading is where the most of the money is made. Um, so master the techniques of the swing trading. So this is where the most of the money is made because it's a faster return, quick return. So what is the swing trading? Swing trading is a combination of slower pace of investing and quicker pace of day trading. So it's in between uh, investing and day trade. So in between, it's a combination of both. You get in, ideally you should be getting out within 7 days. If some of the trades don't materialize in 7 days, as long as they are trading technically, if they are within the range you have defined, and you are not stopped out, it's okay. Some of my trade goes to 14 days, 15 days, 17 days, but they eventually they hit, or some 3 days, 7 days. So combining the slower pace of investing and a quicker pace of day trading. So one of these, combine these two becomes the swing trading. And then, so the objective is to maximize profits in short period of time, especially when you combine it with the option. So if the same stock moves 3, 7, 10%, and if you combine it in the option, so option return become 40% and to 100%. And if you sell puts, if the stock is, you are predicting the stock will move up, so if you're selling puts, then the premium just goes away and you keep the premium. So you capitalize on the stock making a move, even though if it doesn't move faster, but the premium is eroding and you're keeping all that premium by selling the puts, naked puts. So you need to have some account balance in case the stock gets put to you, so you should be able to buy. So minimize the downside risk, maximize the profits in short period of time. So the move in the stock trading, 3 to 7%, equals the gains of 40 to 100% in option trading. So that's what we do. So I do have a service for stock trading. It's called tiny stocks. So I send a small cap and mid cap stocks. So the small price stocks. When I spot those small price stocks, if the options are good, we buy the options also. Otherwise, we buy shares. So we just buy shares. So 3,000, 5,000 shares, like Bed Bath and Beyond, or the small price Snap, etc. CLF, so all the Momo, so all the small prices, and some of them have a good option. So if it's options good, the liquidity and the volume and the spread needs to be very narrow, few cents, and a lot of option contracts, and the stock is moving. So we can buy the options. Otherwise, I tend to stay at a higher price of stocks, $30 and above, and not more than 300 uh, price. I don't trade big price stocks options. And there is a reason. I can trade, but the traders don't have a portfolio and they buy. So they don't realize what they are doing. They just buy, even though they have a smaller portfolio, and they're buying a big price option. So when they buy a big price option, even though their portfolio doesn't should based on their portfolio size, they are not supposed to buy even one contract. And if they buy one contract or two contracts, because they don't understand the risk in terms of the risk, they don't have any idea what what they're doing. They just put too much money in one trade. So uh, because they're buying 5 contracts, that's what their broker have set for them. They it doesn't matter if it's a $5 stock or if it's a Tesla. They're just buying 5 contracts or 10 contracts. So when the 10 contracts of something which is trading at 1,000 or 500, if it goes in your favor, it makes a lot of money. But if it goes against, then it's losing a lot of money. So it's imbalance. So in order to just I just don't send high price options to the members. Now, so swing trader tools. So if you ask me what are the tools, so I am a visual trader. So there's no need, you don't need a perfect indicator. There's no such thing as perfect indicator. Maybe if you have a good for you, then you have a perfect indicator. I don't have a perfect indicator. I'm a visual trader, so I identify the chart and I do my analysis based on my previous experience. I've seen so many charts. When I see it, I say, okay, this one looks good, interesting. So I buy that. Use judgment. I use my skills, my previous expertise. There's a lot of flexibility, so there's a lot of discretion. So I'm a rule-based discretionary trader. So I do have rules and checklists and filters, and then I make my decision. There's so many parameters. Even after uh, the stock going through passing the checklist, there's still some decision you need to make. Unless I have programmed everything, and even all the positions I have open, all the dollars I have, all the market conditions. So everything going on right now, what I expect tomorrow or an hour later, everything is programmed, and then that program is making the decision. So the I mean, companies and the guys, they have done, but not me. So uh, after the rules and checklists and everything is passed, then I decide the what to trade and what not to trade. So proven pattern. So the pattern which again and again proves to work, I use that. Broader markets and indices. So I analyze the markets every day. So I understand that this is what I expect from the market. So you need to spend time on the market analysis, and then you stack the probability in your favor. So this is in a little summary of the swing trader tools. So develop your expertise in these, and then capitalize on the swing trading game. Now, the uniqueness of swing trading is easiest trade comes before crowd notices. So all these swing trade come should come before it comes in the news that this stock is making a new high, or this is the news, etc. You identify before it becomes uh, they're talking about in media. Fortune is made by a singles, not home runs. So fortune can be made by a gaining 40%, 50%, 60%, not 200, 300. If you wait for 200, 300% gain, then it may come and it will not. So ideally, you must have a systematic way of taking profit. So I will explain to you about my target. So you must have a systematic way of making money. So fortune is made by singles, not home runs. And fortune is made in the market if you are humble. If you uh, comment like a jackass on a webinar, you will not. So there are people, just make some silly comment. They don't make money. So be humble and follow your rules, follow the checklist. Remember, fortune is made via singles, not home runs. So systematic way of taking profits. Home run, take care of it. If you encounter, if you get one or two home runs, that's good for you. So that's good, but don't rely on those home runs. It's smooth and rising equity curve. So just our objective is to have a smooth and rising equity curve. If it's rising fast, if your equity curve is rising fast, you're doing something wrong. And that something wrong is that you are trading very aggressively. You are putting too much money in few trades, and because lady luck is in your favor, so you're making money, but eventually you will get caught. So don't do that systematically, day after day. So our swing trading, so we have swing trading on the forum, on the website. We provide real-time trade alerts. I provide you the specific buy price. So when the trade comes to my attention on a day chart, so I look at the day chart. That's where everything begins. So I look at the day chart, then I lean on the weekly chart. I see that. Then there are other checklists. I go through the 10 to 15 items I go through. And then I say, okay, this is the trade I will take. So once the trade is taken, I send out the specific buy price. So you get the buy price which is trading at that moment, not something which was trading half an hour ago. So it's that at that time. If it's moving, you may see 10 cents, 15 cents move. Then if you be patient, you will get filled. Then immediately I send you the targets, and I will be providing you the time stop along with the percentage of the loss. So you will get in time stop also. So I provide three targets, and there is a reason for providing you three targets, because entry is simple. Anyone can get in the trade. Just close your eyes, or a 500, okay, this is the stock I'm going to buy, you can buy. Now where to get out and how much, how much I'm buying and where am I getting out, what should be my scaling in and what should be my scale out. That is where the money is, knowing where the targets are. So I do provide three targets, and I will explain to you about the target. I do provide technical analysis via chart. So I prepare the chart and send to you right away. The chart goes to you, so you can look at what I'm seeing. And if you don't, then just over the time you will understand. I teach you, like today I'm teaching you something about the strategy. Tomorrow or next week I'll teach you something else. I have a Facebook group. You can log in on Facebook Trade Genie, the real Trade Genie Facebook group, because there are scammers on Facebook and Google, etc. They or YouTube, they are all copying Trade Genie. So the real Trade Genie, so you can figure it out which one is a scam and which one is real. Then I provide you also 71-page trading system guidebook, so you can read that. So no shortage of profitable trades. I provide you the best out there. There are some trade. There's no shortage of trades. I withhold the trades sometimes because I cannot just bombard you a lot of trades. There are a lot of some on a given day. There's or the market is so good. There are a lot of trades, but I cannot bombard you. So I keep them in my watch list in case they pull back. Then I give you those trades. So we do all the work, constant monitoring, uh, consistent objective is to grow your portfolio, build your self-confidence, improve your technical analysis, and become an independent trader. Now I will show you, explain to you about the targets, so you can understand uh, what I am talking about the targets. So just a second, let me open the target slide. So there are three targets, and some targets get revised, and sometimes they are not. So here is the example. So when we when we open a new trade, we don't give you the story. Okay, this is a long story. Nobody is interested in reading story. All you're interested in, you're busy. All you're interested in, tell me the specific buy price, give me the strike, give me the month, and give me the price to buy. So let's say we just for example, Facebook, which is at the old symbol, March 245 calls, buying to open at $10. So $10. So that's all you receive on your SMS and email. If you subscribe to SMS, you get the SMS message. Otherwise, you email. So that's all you see. Buy Meta for March 245 calls at $10. So you open your platform on your on your app, and then just buy at 10, 10, 10, 9, 990. Don't chase. So you get filled. So this is the breakdown. Stock is Meta, Facebook, month March, strike 245. Type is call. If it's puts, it puts. Action, buying to open at suggested price, $10. And we always buy third Friday expiry. So it's a third Friday expiry. Sometimes they have multiple expiry, so you third Friday. So once you get that, and then you settle down. So you bought this and you settle down, and then you will wait for your next message, which will be okay. So this is one little twist here. Sometimes we buy to average down. So we don't average down just for the sake of average down. That okay, the stock has pulled back and it's trading at options trading at 6. Should I buy more? No, don't buy more at this time. We buy when we see that there is a pullback has occurred at the support, and now the stock is rebounding. Only then buy more. So we do watch. So we do watch the opportunity to add more. So if you are a new member, let's say you didn't buy at 10 and you join and you got lucky, you say, okay, I joined right now and I know you joined and this one is trading at 6. I will send you the trade to buy at 6. But those who bought at 10, I will tell you to buy more. So your average, so at 6, you will buy 2 contracts, not one, because you bought one at 10. So you will not buy one at 6. You should be buying at least 2, maximum 2 contracts, and not one. Minimum one, of course, but maximum 2 contracts, because you need to invest equal dollar amount almost on the second buy. So you put 1,000 before, and you putting 1,200 another one. So you bought 2 contracts. So now you have 3, and you will have an average price somewhere between 8, somewhere 758, whatever is somewhere there. So now you have, and we know what is the average buy price, and we are monitoring the targets which we provided you. So now we will guide you also. So this can happen, this scenario can happen, that we will tell you to buy more. So another thing you need to do, and you can learn if you are a busy person and you cannot watch, you can learn setting the conditional order. So the conditional order is the order where an event occurs and that event triggers the sell order. So the event can be any event. Event can be the target of the stock is hitting. When the stock target hits, sell my contract. When S&P hit this target, sell my option contract, or when the day is about to close, sell my contract. So the event can be any. So you set the conditional order based on the event. So you can learn your conditional order on your brokerage platform. There is a separate presentation on this topic, which I will hold some other time, and I will explain to you how you can set the conditional order for your option based on the stock target. I don't provide you the option targets because it's very hard. I cannot predict what will be the option price 4 days when the target is hitting. I don't know. Maybe it takes the target gets hit right away tomorrow or 5 days later, 7 days later. So there is a lot of but I'm not reading the charts of option. I'm reading the chart of a stock. So whatever is the option price at that time when the stock is hitting the target, that's where I need to sell. So I, whatever my profit objective was, okay, I will sell at 50% gain, but 50% gain was not there. Even my stock is hitting the target because the time has passed, and it is 10 days gone by, and the stock is just hit the target. So at that time, I may be at break even, or I may have only 5% gain. So I have to sell because the target is hit. So traders, they just lock themselves saying that, okay, my objective is 50%, so I will sell at 50%, and then they are not able to sell because the stock has taken time. Maybe it's hitting the resistance, maybe the market is collapsing. So many things going on. So that's why I provide the stock target. So this is stock target is just one criteria. There could be another criteria, time based. So certain time has passed, 10 days gone by, the stock is not moving, the option has only 30 days left to expire. So all these different combination, multiple exits criteria, they are all getting hit. So there may be exit triggering based on the time path, based on the stock is moving in a consolidation. Maybe I have a better opportunity. Maybe the market is pulling back. So many things goes on, and so we send out the sell alert for you. So we also send you the trade update. So any news coming in, which we see worthy that you need to read, so we will send you any technical analysis. We send you if the volume is accelerating. Sometimes we sell on a volume climax. So when the volume is accelerating, we are already in a position in the volume. The normal volume is 1 million, and now it's 5 million, 7, 10 million. So in that time we sell, we because that could be the volume climax. So there's nobody left after today. There is nobody left to buy, and we are better off selling today. So when that happens, we send you the alert to take the profit. So now the trade target. So the target analysis is the most important, in my opinion. The target analysis is the most important factor in your trading, where to sell. So that's where the traders don't the lack the knowledge. So focus your positive energy onto a desired result. So the result is like 50% gain. So, and the target determination is science and an art, because you're looking at the chart. It's not easy to understand the target when the stock is trading in a previous travel territory. But if it's trading at an unknown, uncharted territory, then it becomes science, real science, mathematical. You have to figure it out where the stock is going, because it's making a new 52-week high, or it's making a new lifetime high. So when the stock is making a new lifetime high, then and you are getting in, then where to get out? If the stock is trading in a previous territory, so you have a map. So you have a map. Let's say you have a map of Detroit, and you are in the Detroit, you will end up, if you want to go in the downtown Detroit, you will end up in downtown. But sometimes people have a map of Chicago, and they think they have a map of Detroit, and they get lost. So because they cannot figure it out, they think they have a map of Detroit, and they're looking at the map of Chicago, and they're lost. So understanding the stock target is very important. And then not only that, then you say, okay, I need to have some strategy of scaling out. Not just, sometimes it's okay to get out all of in one order, sell all. in just one target because that's the only target left. But we scale out at the different targets. So depending, because some members have 10 contract, 50 contract, 100 contract, some have one or two. So it depends. I don't know your position. So stock must follow target like a precision guided missile. Also, so when you are entering in the trade, so you need to know the exit. So if you cannot figure it out the exit in advance, then you might as well not trade it. And it happens to those who buy based on someone else's recommendation. So they buy it. The buddy said buy this, and then the buddy is not there to tell you where to exit, and then you are on your own way to exit. So it's not a good thing. So types of targets, I call it green, yellow, and red. So in other words, green is the first target, yellow is the second target, and the red target is the third target. And then there is another one called beyond red target. So just imagine first target, second target, and then the third target, green, yellow, and red. And there is a reason why long time ago, I said, okay, how can I explain to my members my targets? I said, okay, I'll call green, yellow, and red. So I explained the logic. And so just think about green as first, yellow as second, red is third. And then there is a beyond red target. So what is the green target? So the green target is the target which is immediate target, which has a very high probability of hitting. The stock will hit that target. So if you set your position for the option to close, you have a 95% probability of that stock hitting the target because the green target is close. So let's say I buy an option at $25.70. So if I buy 25.70 and my green target is 27.90, it has a very high probability of hitting. So what I do is I say, okay, where is my green target, which has a high probability 95? So I look at it from the point of view, is there any resistance from the entry to the green target? So I evaluate, is there any resistance? What is the level of resistance? Is it a strong resistance or is it a minor? So let's say I say, okay, 27.90 is should be the target, and there is a slight resistance above 28.50. So I know, okay, resistance is 28.50. I'm giving 27.90 as a green target. So it's like jumping from the train before the train reaches the station. So I say, okay, green target 27.90. So you are supposed to sell 1/3 or 1/4 of your position, depending on if you have 9, you sell 1/3, 3 of your position. If you have 10, maybe, or if you have 8, you will sell 2. So you sell 1/4 of your position. So you sell some, and the stock may pull back a little bit, and sometimes it will just I don't know, it will just accelerate and just keep going. So it can go to the yellow target, which is the second target. So I do send out. So as soon as the target, in fact, the system is designed that when the target is a little distance away from the hitting, I get the alert. So I get the alert. Let's say the target is set at 27.90. I will get the alert at 27.50. So I see it. Pop-up comes up 27.50. I know, and then it says 27.90. So I look at it, and then I decide to send the alert. So I choose to send the alert. I say, okay, sell half or sell 1/3 or sell 1/4. So it depends. If we are holding it for a few days, if we have other positions coming in, what's the market is going. So all those other factors are taken into consideration, and then I send the alert saying, okay, you sell 1/3 or 1/4 or 1/2. So once it's gone, then the second target is the yellow target. So the yellow target is the target which has a which could be like this. So let's say we entered at 25.70 and the green target was 27.90. So now and the resistance is 28.50, which is not that strong. So I know that it will dwindle at 28.50 somewhere nearby, and then it will break through. So when it breaks through, how far it will go? Where is the next stop? So that next stop needs to be understood. So that below that stop, some percentage of the ATR, some offset, something below that, I determine, and then I set the target for yellow. So when the yellow target is approaching, I get the alert in my system and I say, okay, it's time for us to send the alert to the members to sell more. So we send out alert that, okay, sell majority or sell half or sell rest or sell all. It depends what is happening at the yellow target. If the yellow target is hitting in a like limping fashion. So if a limping, it's just dwindling, and so okay, sell all. If it's breaking through, then we may say don't sell whole or just sell half or majority or whatever. So it depends on what is happening. Maybe the yellow target is hitting near the market close. So if it's market close and on top of that is a Friday or the long weekend is coming. So combining all that, we may send you the alert to sell all, or maybe we have another better position to tell you to open. So I'm getting ready to open another position and this trade is hitting the yellow target. So I say, okay, sell all because I have a better position. So your dollar will work for better gains because the new trade is coming from the beginning. This one is already in progress and it has traveled from a green to yellow. So not much meat left. So send the yellow target. Now there is a red target. So when the red target is the third target, so it has a lower probability because it is set at further distance. So remember, it is easy to predict what will happen. It is easy to predict to the stock what will happen in the next 30 seconds than 30 days. So the more the duration, more the distance, it is harder. It's very hard to predict what will happen 30 days from now. I can predict the stock what will do in 5 seconds later. It will go 2 penny to the upside. And I will be always right. So the red target is far, so it's hard to, but I do send out the red target. So the red target is the ultimate target where significant resistance is there. Or if we conquer that red target or hit the target, we will make a lot of money, but there is some risk there. So the probability, the further the target is away, the lower is the probability. So think about that. The further is the target, the lower is the probability. So we send out alert. So we track in our system, we track what kind of messages we have sent to you before. Have we sent you 1/3, 1/4, or majority, or half? So we track what earlier, what kind of a sell alert we have sent, because we track everything. So if we have sent you the alert before, then we know we have sent you sell half or sell majority. Then we will be sending you sell rest. If we have not sent you any target, then we know you're holding it, and it so happened it gapped up. So like, let's say RIVN, we buy at whatever 33 and it gapped up and it's trading at 36 something. So now 36, but we still see the potential. So we will not send you the alert to sell all because we see the potential. So we will update the target pre-market. We will give you the heads up during pre-market, let's say 6:15, 6:20 Pacific time, that RIVN is expected to gap up because we see it's gapping up, and then we know where is the target. So we adjust it to the upside. Sometimes we do adjust to the lower side, and there is a reason. I will explain to you why we adjust the target at a lower level doing based on the pre-market price action. So traders don't know this, and they just say, oh, the stock is gapping up, and why I'm seeing the loss. So I know. I'll explain right now. So when it hits the red, if it hits the red target, then you are expected to sell all, and unless we send you the revised red target. So we are aware of the red target and we see the potential. So we want you to hold that position because there is a significant gains to be made. So we send you the immediate alert that hold, don't sell a red target, and here is the revised red target. So what we do, we move the red target to yellow, yellow to green, and then we put the new red target. So it's an upward target. So you have new sets of targets. So revise red target, we do that to capture more gains. So this is another thing we do. So the third target is revised to the new target. So now you have a new target. So it depends on your portfolio size, it depends on your risk, it depends on your expertise, it depends on your availability. So there's so many combinations going on. It depends on what emotions you have at that time and your schedule. So many things. If you don't have one of these and you say, no, I just sell everything. So you sell. Maybe you you sold puts. And even though I'm revising the red target to the upside, but you don't care because the puts you sold is trading at 10 cents or 20 cents. So you close that trade, free up the capital, and you go and open another trade. So you don't care if it's a red target or revised target. The premium is zero, almost zero. So you just want to close that trade. So it depends what you're doing. Now, the reason we revise the red target. So the reason we revise red target, the stock can gap up. So the red target is determined based on the resistance level. So let's say we determine the red target at resistance level, and now in the pre-market we see the stock is gapping above the red target. So it's very good. Now we know the stock is gapping above the red target, which is the resistance level, and it's trading in the pre-market, and we can see the volume, etc. There's some price action. If I go and look at the news, I say, okay, the news is positive and the stock is gapping up. It should gap above the red target, so it's time to hold the target. So if I have a sell order, I look at it in my portfolio and I say, okay, I hope I'm not out, and if I'm not out, I cancel, because I know, okay, if it goes above, then I will be better off holding it. So if all this goes on during the pre-market, so there is a system to watch the open position, the pre-market, and watch the general market, what's going on. Sometimes, think about this: your stock is gapping above the red target, but the market is red. So what will happen? It will gap above the red target, and then eventually during the day it comes below the red target, and it may come down and go below the yellow target. So in that situation, it doesn't matter what the stock is doing, but the market will bring that stock down. So at that time, you need to close during the first 15-20 minutes when the option market is stabilized and you get the better fill, the spread is normal, and you sell. Now, there could be a situation when the stock stays above the red target. So the market is looking good. There are other stocks in that category moving up. So let's say you bought autos, you are in an auto stock or the crude stock or financial, and all the other financials are moving. The market is green and something is good. So your position is good. So maybe that tells you that you need to stay in the market. So you stay in the market and you're watching it at the lower level time frame, and you see it, your stock is holding the red target. It's not coming down. So hold it. It's safe to hold. But if it breaks below red target and you see it clearly that, okay, I need to get out, so you sell immediately. So it's all depending on what you have, your own trading. We send you the update, and it's all, you need to be ready to leave the town in 30 seconds when you spot the heat. You need to leave in 30 seconds. So anything can happen. If you cannot, then just when the market opens, you sell and you say, okay, I'm lucky, I got the red target. So sometimes we do send out the revised message that the targets have been revised. So the target adjusted upward. So we do revise the target, and this is not uncommon. It's common that we do revise the target depending on the situation. So first target price is replaced by the second target. So the second target, which is yellow is the green is replaced by yellow, and the yellow is replaced by red, and then we provide you a new target. And then same for puts. So we can, if the stock keeps going down and we see the more room, then we keep revising the target to the downside for puts for you to make money. So this is about the target. Now we have multiple messages. You see it. We send you selling 1/3, selling half, selling majority. So it depends what kind of target is hitting and what else is happening in the market and what is going on. So we send you these kind of alerts. We send you sell rest, and one of these is triggering. We sometimes send you sell all. We send you sell all. Doesn't matter. This is the first alert and telling you to sell all. We sometimes give you the price range. Sometimes the price range is in the option. Sometimes the price range in the stock. So if the stock is trading at, let's say, 36.50, and we know it will hit 37 and may go to 37.50, we will give you the range, sell all of your option between 37 and 37.50 stock price. Or we can give you the range between the bid and ask of the option. So if it's going crazy, then we tell you the range of the options. It sell between this option range. So we do that. Sometimes we even tell you sell to close by market because the stock keeps moving, and we don't know where it will stop. So it's better to just close near the market close. Maybe it's Friday, maybe long weekend. So we tell you to close by the market. So you just keep hold, and whatever price you get at the market, you sell it. And we give you this alert, but we monitor it. So if something happened, we tell you to close now. Also, once in a while, we send you the alert to close when major index hits a target. So let's say when the Nasdaq was trading below 10,000, Nasdaq 100, so we send the alert saying, okay, Nasdaq 100 is hitting 10. When the Nasdaq 100 hits 10,000, sell all. So I'm watching, and when I see the major target is hitting in some indices, so I know that when the major target hits, all positions, doesn't matter how good they are looking at, there are some exceptions, they will come down. Eventually, they will pull back. So sell all of your basket of positions when the major index hits. So there are many reasons. So you see now there are many reasons for exit, and there is only one reason for maybe there is one reason for entry, which is it looks interesting, and it looks interesting, and you went long. But where to get out? There are many events. So you have to be aware of. Now there's another pre-market or after-market price action where traders don't pay attention. Sometimes the target hits, your major target hits during pre-market and after-market because of some event and some pre-earning news, pre-market news, or earning or after-market. So when the target has hit during the pre-market or after-market, that could be it. That's it. It will not move because the major target is hit. So you need, if you are in a position, or even if you're not, you need to be aware of what is the pre-market and after-market high or low. So pay attention to that. Maybe some event occurred. Chances are stock will pull back during regular session. So let's say your red target was 99.50, and you're happy. Okay, okay, I bought a 90 and it's 99.50, and I will, my target is 99.50, and I will sell when it hits. And then it hits 99.50 during the pre-market session, and then it opens at 99, and then you're just waiting for 99.50, and it's not happening, and it's 98, 97. So you did not notice that 99.50 was hit during the pre-market, and that's it, that's the top. Now, and especially if you have option, because option open 15 minutes later, whenever the market maker decides to open, when he settles down his book, when he says, okay, everything is in his favor, then he will open it. By that time, the stock is trading at 97, 96, and then you wonder what I will do. Sometimes it goes up back next day, sometimes it never, because 99.50 was the top, and it hit during pre-market hours. So you need to be aware of. So all this goes on, and we monitor and we send you the update. But you have to, in order to be responsible trader, you need to be responsible for your own success. So you need to watch all this during the pre-market, after-market yourself. But we do help you. So we also tell you when to add more to the position. So it could be the same strike, same month. Sometimes it's a new strike and a new month. So traders have a tendency to just average down as if there is no other strike, there's no other month available. If they bought something, they just want to average down the same strike. That is not, most of the time, is a bad strategy. Not good. So you have to know how far you have and how many days left. Maybe the stock is looking good, and you're buying the wrong strike. So the stock doesn't care which option you're buying, it will do what it's doing. So you need to know which strike and which month to add when you're adding. It could be the same strike and same month, it could be a different month, it could be the same month but the lower strike, it could be the higher strike because the stock is moving and you want to add more, so you don't want to add the strike you have because you say, okay, why do I add this strike and pay this high price? Maybe I can roll up. So you may be buying a higher strike and then selling the lower strike when the yellow target hit, and then holding the higher strike for a higher target. So all that you need to learn. So and you can create a vertical spread. So all that you can do. So I hope you understood how we trade. We do all this work for you, and that's it. If you have any question, please let me know. Send me an email. James said, I don't know what you're talking about. Not showing me charts. It's worthless. So he said all this I talk is worthless. Okay, so it's worthless. That's fine. Okay, thank you. So let me see. Okay, James is not happy person, and his last name is Mean, M-E-A-N, Mean. Unbelievable. Okay, James. Thank you. Any other questions you have, please send me an email. And he just bombarded me with 10,000 questions and left. Okay, thank you. Yeah, James saying you are worthless bullshit. What else is he saying? Yeah, so he just bombarded me with a lot of nonsense. I don't know. And his last name is Me. Unbelievable. Thank you. If you meet James Mean, please say hello to him somewhere. Thank you. I'll see you tomorrow in the market. Thank you. Bye.